Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at Tesla. Why? Well, because everybody else is. If we look here at the daily chart, you'll see the stock actually blew through the top of this channel last week, right? So it had been trending really, really well above the middle Bollinger Band, which is a 20-day moving average, and then it really blew through to an even higher level here, peaking yesterday. So we had a trade, well, we still do have a trade going on Tesla, and we were, look, we didn't get in way back there or anything like that, but we got in. We've been riding this thing for a while here, and so after this kind of move, then it's time to kind of start protecting profits. And so what I had suggested to our people is go ahead and take some off the table, but then leave some on just in case the stock keeps going. And this is all about risk management. This is what I'm talking to you about now. And so why did I decide to do that? Well, first of all, because the stock tends to sell off after a big earnings run. It's kind of like it doesn't even matter what the numbers are. It will, there will be profit taking, again, especially after the stock has made a big run, which it has. Okay, so this time around, okay, they beat on their margin, they beat on their earnings per share, but they didn't beat on revenues. They missed revenues, and in my view, revenues are the most important number, because if you're not selling, all the other stuff doesn't matter. You can always monkey around with profit margins by moving things around. You can always monkey with earnings as well. So the one thing that you can't mess around with is revenues. I mean, there kind of is a way you can do that too, by kind of pushing stuff either ahead or behind a certain benchmark, but that's for another day, and it ain't going to be me talking about it because that's not what I do. But the point that I'm making here is, so we say go ahead and take half. Okay, so that's what you do. And then you're expecting the stock to either fall by 40 or rise by 40, and that's what the options market implied. So that would take it up to, we'll say, 900 on this side, and about 820, we'll say, on this side. Well, the stock didn't do that. The stock is staying right in the middle of the range. Now, I don't think it's going to stay there tomorrow, but the point is, I think this is really impressive that this stock, after the run that it's had, did not sell off, even though they missed on revenues. So what I would suggest doing, if you're long the stock, look at the weekly chart. The weekly chart will give you a better reference now, and this is why. We'll get rid of some of this mess here. Okay, I drew this stuff quite a while ago, and what I was expecting, or I kind of hypothesizing, was that this stock, if it would just trade sideways, which it did, if it would just trade sideways for a while and then start ticking higher, we could see a nice run, frankly, to $1,000. And I still believe that, though it ain't going to happen tomorrow or next week, next month, or even this year. Really, well, hell, there's only 2 months left, so I'm pretty sure it's not going to happen this year. But I am pretty sure it's going to happen. So you just have to decide what your holding period would be. But I would just suggest this. If you're holding it over earnings, I think your holding period goes through tomorrow. I think you're going to be fine on this. It hasn't sold off in the way you might think it typically does. It hasn't rallied, but that's actually a good thing because the stock's already extended. So the best thing in the world for this stock to do, as far as the health of the uptrend, is just to keep kind of grinding around there for a while. Okay, let everything catch up to it. And then finally, in about a month or so, boom, then it takes off and gives you a nice Christmas present. Okay, so, that's all I got for you. I'll see you all next time.